talk more about Uber with Rett, Wallace, CEO at Triton Research, and Steve Jang, founder and managing partner at Kindred Ventures and an early Uber investor and advisor. Rett, we hear from you quite a bit. Stephen, you had, your initial investment. You had 120 billion. You got 57 billion on a scale of 1 to 10. How are you feeling today after the results? You about a 6.5, or are you still ecstatic about the investment?
I've always been a 10 on the company since 2009. So this company's vision has always been about long-term growth and changing mobility and logistics, and they're on track to do that. We've got a strong seasoned management team in place running the company and steering the ship, and we're super excited about it. Nelson and Dara are doing a great job.
What I didn't get to ask earlier, and I'll ask you the question now, and then I'll ask Rett, and that was, I mean, sooner or later, it just seems like Uber and Lyft are too good to be true, and it's still pretty expensive. Like, it works really well for the situation a lot of people are in with their kids or even themselves, but it's still expensive. It's kind of a luxury to be able to, not take mass transit or whatever. And if to get to where it's actually profitable goes up a lot, I'm not sure, is it inelastic, the demand for it, or do people finally do something else and it doesn't become profitable ever? Stephen?
So I think the overall vision for the company is to build multiple product lines off of one common platform and driver network. So what you're seeing is segmentation across Uber Black, Uber Pool, Uber X, and you're seeing actually experiments with public transportation in Denver with Uber. And so I think that the concept that pricing is too high is actually misguided. I think that there's pricing for segments there that fits Americans and global riders well. I think the other point too is that when you build multiple product lines off of one platform, there's a common infrastructure there, and there's multimodal transportation as well. And so you see freight actually picking up as a new business line. So I think the idea of utilization across the platform, the global Uber platform, is super important. The logistics and the transportation mobility, all of that is sort of, they're customers of the platform, so to speak, from a technology perspective.
So Lyft would need to do this too then. If we were just talking, and I know we're talking about Uber, but you would say that all these positives about Uber, they're not currently in Lyft's business model, are they? Or you figure they will be?
Yeah, I think, that runs across the board for all of Uber's competition, whether it's ride sharing or it's third-party food delivery. All of their competition are sort of single-purpose companies, usually in one region, right? Europe or Asia or the U.S. Uber is the only company that's truly global and has multiple lines of business that are scaling right now. Okay. So, and they're mostly funded by private equity dollars today, whereas Uber is now public and it has a seasoned management team running the ship. And so I think one of the things to watch here is how the private equity dollars dry up, and I think the ultimate winner here is going to be based upon brand, products, balance sheet, and management team, and we'll see how that plays out.
Rett, has anything changed since the report came? Or?
Since yesterday, nothing. It was a nice, boring call, which is what it should have been. I mean, this management team, I think, was very comfortable, very steady. It's going to make people feel like, okay, they know what they're doing. We already knew what the numbers were going to be, so there was no surprise there.
That's why my biggest takeaway, I think, was when they talked about how the competitive pressures could be easing. Do you believe that?
Well, what's interesting is they say it could be, but they don't know. So it means they don't control it. Right. So what I heard yesterday on the call, and yesterday in total, was really three things. As far as the business is concerned, revenue growth for them is about different products. So Eats is a way to get new customers, scooters and bikes is a way to get new customers. Discounting and the competitive dynamics are about profitability. So Lyft uses discounting to get share. So discounts are a growth driver for Lyft. Uber thinks about that as making it rational. When they compete on brand rather than on discounting or incentives, Uber says that's good because it means that they get back to profitability. But I think the other story we're seeing, and Steve just mentioned this, as far as the private equity dollars coming out of this theme, the average basis of the investors in Uber pre-IPO is less than $11. right? And with SoftBank now sort of borrowing against their position to shift out of their big ownership, right, it means that we have to find new investors for this company to support it in the public market.
Did they say anything about how they think the competitive pressures are easing and therefore we will no longer discount?
They said no. They said the opposite of that, which is that we think it's easing. We hope it's easing. We're a lot more comfortable in our chairs than we were last quarter. But if people want to fight about price, we'll be right there to fight with them about price, is what they told us. I know, exactly.
As an investor.
So buckle up, right? And so that really, for our smart customers who sat out the IPO, who said, okay, there's no catalyst to invest here, and that was true at 45, that's true at 37, 38, $40. When do the IPO investors show up? That's
Steve,
the question.
Last quick word.
And keep in mind that the multiple lines of product that Uber's running, Uber Eats, Uber ride sharing, they're all built off one platform. So the marketplace and rider apps and the driver network. So they're able to create multiple sources of utilization on that platform, whereas most other companies that they're competing with cannot do that. So I would watch that as well.